Hello, folks. Brandon Chapman with you today. It's the TheoTrade video for Monday, October 21st, 2024. The S&P today barely finishing down 0.16%. That's the SPY. This is the SPX. But the bond route, obviously spooking interest rate sensitive parts of the market. And in this case, we're spooking what? If we look at XLRE down 2%, that is real estate, folks. And the reality is bonds have been quietly selling off. And I say quietly selling off only because it's not been a general concern for the market, as we're basically flirting with all-time highs in the S&P over the past 5 days. If we look at 10-year Treasury yields, TNX CGI, this gives us a sense of what's happening. Yields on the 10-year have gone from 3.6% now to nearly 4.2%. As yields rise, that means prices are going down. It's a teeter-totter effect. This is the fastest pace of selling really we've seen all year long, and yet the markets remain resilient in the face of this. And this all has to do with the idea, is the Fed not going to cut rates as quickly? Are we not through the kind of inflationary stage of the market? Are we about to see oil prices start to surge again? We're kind of holed up down here close to 70. Do we see a rise in oil prices in the near term? I mean, certainly we look at the product depth, something we've looked at extensively here. And what you see is falling prices as you move out in time. This is called backwardation. This is generally a bullish condition for the market for oil, as we're looking at shortages out into the future. And certainly the inventory situation seems to be that way. However, again, today, the only positive sector is XLK. Gold underperforming slightly at basically flat on today's session, but fading from the high of the day. But as we go back in time here, let's look at 1 week relative performance. Gold's up 2.5%, being the top performing sector in the last week, including today. The last 3 weeks, we'll highlight this. The only area that's outperformed gold in the last 3 weeks is financials. Is financials about to see a bit of a turn here? Don put on a in-out spread last week, looking for some downside today in the coming days, rather, in financials. But financials have led the last 3 weeks, but gold, the second best performing sector. We look at the 6 week time frame. The only thing that's outperformed gold is industrials by a fraction, and technology, which includes what? The coming off our lows back here in early September. As we look at the last 12 weeks, the top performing of all these is gold, outperforming all of the sectors within the S&P 500. And what makes gold so precious? The fact it's not the dollar, right? The reality is the dollar has fallen in real terms and gold has risen in the near term. As we look at the dollar sign DXY, we can see that the dollar in relative terms strengthened today vis-a-vis what? Mostly against the euro/US dollar, which makes up about over half of the dollar index. But the dollar, both in real and relative terms, strengthened today. Herein is the rub, right? Normally, as treasury yields rise, interest rate sensitive parts of the market like gold, like utilities, and like real estate generally perform poorly. And if we go back here, this goes back to the low in mid-September. We're now what? Almost 5 weeks down the road. And as we look at the performance, utilities is barely underperformed gold. Real estate's been flat in the last 6 weeks and has not sold off in the face of sharply rising yields on the 10-year Treasury note. This brings us around to the point. What's about to happen with real estate? Real estate, we had a nice little bounce here. We're falling off today on higher volume. Volume's honestly all that significant for ETFs, but in this case, again, we're seeing a little bit of a bump in volume. We're definitely seeing a rise in volatility of 2%. Earlier today, we walked through a scenario looking at an unusual, or large option activity, unusual option activity, what do you want to call it, on IYR for the 8 November, see, oh, where am I here? Got to bring up IYR. That's the problem. All right, why isn't it showing the 8 November? The IYR has weekly options here in the 8 November timeframe. You'll see a downside put spread being bought, buying the 99s and selling the 96. That's 18 days. This could be a hedge, it could be a bet, doesn't matter. It's certainly the timing of today, looking at downside expectations. Again, 99s being bought, 96 is being sold, 96 is down here. Expecting a pullback to retest and break through recent lows, or the potential for that to take place. And if today's breakout in the 10-year treasury yield and other parts of the bond market, because of the selling, is going to continue, you'd probably expect real estate to fall back towards these levels again, at least in the near term, testing 98. As we look at utilities, again, utilities had a phenomenal week. The last week here, in extending in the week before, but these 4 or 5 days right here, we're consolidating right now near highs at 82.50. Are we on the verge of starting to see a break down in the price, at least retesting 78? You might expect that if we're talking about a continuation in the selling in the bond market. And again, it makes it easy to kind of play these kinds of downside verticals because volatility is rising as you move out of the money. It's easy to buy high and sell lower relatively cheaply as a vertical spread. But now we're going to turn our attention to gold. Gold has outperformed virtually everything, right? Has outperformed everything in the last 12 weeks, and mostly everything in the last 1, 3, and 6 weeks. What makes gold so precious or so special? It doesn't, right? There's only the potential for gold to maintain its purchasing power. The real return on gold over time, once you strip out dollar's weakness, is that it's going to have a negative return. Why does gold have a negative return? It's because it's being stored, right? It's being stored in a place, and the reality is you've got to lock it up. You got to pay to find it. You got to pay to protect it over time, to have it allocated at a bank or even store it in your home. Gold carries a negative real yield over time. The only reason gold goes higher is because of the dollar. And if the dollar's about to strengthen, gold will go lower. The only possibility here is that the dollar continues to weaken, even amidst the bond selling. And again, gold continues to eke out smallish gains moving forward. But today's trade, looking at the gap and the fade today in gold, seeing the breakout in treasury yield, we may see these normal relationships be restored where rising bond yields, falling bond prices ultimately negatively affect gold. Gold's been something we've been bullish on in my sessions for a while. We had a spread, 248, 250. We talked about taking that off the table today and potentially re-entering on a pullback or re-entering on a breakout. But either way, taking profits into strength as we're seeing some degree of weakness. So as we consider what's going on with the bond market, if you expect to see bond yields continue to rise and prices go down, you might expect to see some moderate weakness in gold, some moderate weakness in utilities, and potentially some more significant weakness in real estate. And of course, today, seeing the performance of those three assets and certainly seeing, real estate as a sector decline the most today certainly puts it in perspective. So if you've got trades or investments in these areas, you might take this as an opportunity to take some degree of profit or roll options if you're long options or bullish option strategies. Because right now, again, the risk, and this will be a risk to the broader market. But again, if we look at just TLT here, if we continue to see selling in the bond market, this will spur on likely weakness in gold, utilities, and real estate, and may eventually start to tip the broader market negatively, which, by the way, the timing of that would not be bad as we're continuing to winnow in towards an apex here. And right now we're boxed in over the last several days, a significant print at 580, a high point here at around 585. We're just waiting back and forth in this range, waiting to see which is going to happen. We saw it happen for a couple weeks back here, resolve the upside. Will this resolve the upside? That's hard to say. If we look at the VIX right now, the VIX is still at 18. We look at skew still elevated, although it dropped, but still at 155. The risks still are to the downside, but doesn't mean we can't continue to grind it out. But even if we grind out higher in the market, yields rise on treasuries, we'll still likely see some degree of weakness in gold and in real estate and in utilities in the near term. Anyway, that's what we got for today's video. We'll catch you back next week. Thank you.